We're talking Custodian REIT here on Capital Network this morning. With me, analyst Ed Stacey. Ed, good morning.
Good morning.
And for Ed's full report, do click on the eye in the top right-hand corner of your screen. Their quarterly portfolio valuation report out this morning. Ed, what do you make of the update?
Yeah, so it's the asset valuation report. They'll have their full Q4 results out, we expect in June. But as well as the valuation, there's a few other metrics in this release today. Also confirms solid returns on net asset value of 5.9%. Occupancy remains very high, 96% occupancy, and the balance sheet gearing still nice and low at 24%. In terms of the economic environment for the tenant base, Custodian is reporting robust indicators in spite of the political uncertainties, especially robust in industrial and in office. They've taken a bit of a reduction in asset valuation in their high street retail portfolio. Expect this is not really a surprise to anyone. Remember, high street retail only 12% of the portfolio overall. Overall a strong quarterly update. And
the target dividend for the year, another increase?
Indeed, and this is a very important part of the investment case. So they're targeting an increase again for 2020, having announced an increase for 2019. We've put that chart in our report reminding you that this dividend has been steadily increasing every year since Custodian listed. The dividend yield is higher than the average for the REIT sector, but we also wanted to include a reminder in here that this dividend yield is not only higher, it's also one of the safest dividends in the sector in our view. We compare this based on gearing and based on how well is the dividend covered by rental income. So both of those metrics in our report, and you see on both of those metrics, Custodian remaining well ahead of the peers.
So fair to say, Ed, this update really solidifying your view Custodian REIT's a reliable income play?
Yep, absolutely. So it's regional properties, remember, industrial, office, retail, parks, and other types of property across all UK regions. They're still getting great rental income yields from those type of properties, very favourable compared to, say, prime London office or big retail malls. I mentioned those types of property because they're a big feature across the UK REIT space. Custodian, by contrast, is regional properties, it's smaller unit sizes, and that's what's giving them these big rental yields. They have a lean cost structure, so then they pass on a lot of that rental cash to shareholders. So that gives you your big dividend yield at 5.8%. And what we also wanted to say in the report was remind people it's not just a big dividend yield, it's also one of the safest in the REIT sector.
For Ed's full report, click on the eye in the top right-hand corner of your screen. Ed, thanks very much.
Thank you.